Let's talk about that intraday move first of all. So the high of the Dow is 229 points. We went briefly negative about 20 minutes ago, back up 62. What do you make of that intraday move? I guess the pullback was in line with the European close, which was at the session lows.
That's exactly correct. And the market is forgiving of one such pullback. Should they roll over again and go negative again, it could have more serious consequences. When yesterday looked a good deal like some form of capitulation. It was 9-to-1, 10-to-1 negative breadth and negative volumes, and people said the VIX did pop up to around 25. In the old days, with that kind of selling, the VIX would have popped up to 40 or 50, and so the capitulation case is not fully there. But they're trying to hold together here. They better stay in plus territory.
You throw in Thursday and Friday, we're looking at a sort of 5%, 6% pullback, depending which indice from the recent highs. Is that enough for you in your mind to feel like this could be the day of finding a short-term bottom?
Well, it could be. As I say, it was rather extreme to see 9-to-1 and 10-to-1 negative breadth. But I think it's a little bit too early. The other thing that we're seeing is it's really ironic that both time-wise and percentage-wise, we're still pretty close to the highs that we had. It's been relatively sharp sell-off in a relatively few days, and so we'll see if they can come back out of that. The market was thrown for a loop when it looked like we were going to flip into currency wars from tariff wars, and that could lead to far more dramatic things. So. Markets are nervous. I'm also worried about the geopolitical side of it. I mean, there's speculation that China is readying to send military forces into Hong Kong, and India is making some changes in Kashmir, which is going to get Pakistan riled up. Two nuclear powers nose to nose, that can't be very good for what's going on.
But are the markets just caught right now looking at this trade ping-pong match between the U.S. and China, whether it's tweets or currency moves? All these other things don't seem to be having either a lasting impact on the day's trade or sometimes even a noticeable impact.
No, I think you're right. I think for now the market is virtually obsessed with the trade negotiation, trade wars, whatever you want to call them, because they can spill out into other things. That was the shock of yesterday, that the Chinese yuan went through the 7 level, and that's an area it hadn't really seen in almost a decade. And people said, my goodness, we're moving away from tariffs. This may get out of someone's control, because currency wars are very, very difficult to control. It's usually a race to the bottom. And perversely, for the United States, we're the major reserve currency. So yesterday, as you saw, when there was a concern and a flight to safety, the dollar went up, which is certainly not what the president wants to have happen.
Yeah, and certainly in terms of geopolitical risks, you're seeing the ITA, aerospace and defense ETF rally today. It's about 1.5%, almost 2%. TransDigm earnings that were better than expected. Also some analyst upgrades for defense names, but it is one area where you are seeing geopolitics play out in the market right now. In terms of the key levels to watch today and through the rest of the week, Art, what are they?
Well, I would think what you want to watch is basically staying above yesterday's close. Again, if they go negative again, it will probably cause us some problems. The other thing is we may be headed, if we're headed significantly lower, we may be looking back down to the 200-day moving averages, which are so far significantly below here. But there's not a hell of a lot of support in between here and there. So I think what the market wants to do is temper itself down and hold together.